All right, great to see everybody. We're gonna get started in a minute. There's no way for everyone to show up. We had a lot of demand for today's webinar. We had 60 people sign up, so we're gonna see how many people actually show up to today's thing. It's gonna be an awesome event. Super excited to be able to share with you guys today what we're gonna be covering, and to help you guys make a real kind of change in your business and the assets that you guys are involved with. All right, cool. So we'll give us another minute to get everyone in, but why don't you guys all start kind of getting some chatter going in the comments. Let me know where you guys are from, where you guys watching today's webinar from. People all over the US, potentially all over the world. We'd love to hear about it. So let us know. Just type in the chat where you guys based, and let's get the ball rolling here. All right, so who's gonna be excited enough to go first, or daring enough to go first? Oh, cool, we got 15 people. Hey Brent, what's going on? Attorney from Mexico. How's it going? Brent, where are you located? Daytona Beach, Florida. Awesome. I've never been to Daytona Beach. Oh, I got from David from Ireland, Dublin. Very cool. Awesome. We're literally international here, all over the world. Silver Springs, Nevada. So I'm originally from Maryland. So we live in Silver Springs, Maryland. I've never been to Nevada. The Michigan, Brian, my mom was born in Michigan, so I've been there many times. She grew up in Benton Harbor. Whatever number of years ago. It's been a while, but since I've been in Michigan. But all right, cool. New York, Navdeep, how's it going? All right, awesome. Great to see everyone. Who we got? We got Alex from Switzerland. All right, we're going international here. This is the first time I've been on one of these webinars where we've got international folks. Usually people all over the US. Orlando, Florida, Marcus in the US and Brazil. Fabio, awesome, great to hear. Denver, Colorado, heart of the middle of America, right? The Mile High City, Colorado Rockies. All right, awesome, very cool. All right, cool. So we're gonna get started. Holden family. I know you guys. How you guys doing? Also Miami, Florida. So I'm gonna just cover real quick what we're gonna be covering in today's training, today's webinar. We're gonna be covering three things regarding blockchain and tokenization and kind of the direction everything's going into. The three things we're gonna be covering are understanding how blockchain is about to change everything, right? So I know right now we're actually, ironically, if you watch the news today, it's all doom and gloom, but it's the smart people who understand kind of where technology is going to be going and start preparing for it now to be able to get ready for that change. And I want to kind of go through some frameworks to understand exactly what's going on and what this means for the tokenization market. Hey, Nebanil from Malaysia, how's it going? Then I'll talk about kind of the mindset. How do you understand changes that are happening? How do you recognize them? What are the patterns? And then we're going to get into the nitty-gritty details of how does an asset get tokenized? How can you take advantage of that in your business, with the assets that you manage, and be able to get these benefits of tokenization, both for yourself and any LPs, investors that you have, that you're giving them out with, and what this can do also for your business, being able to reduce costs, automate different processes in your business, et cetera, et cetera. So before we get started real quick, I just want everyone kind of focus a little bit. If you have a cell phone in front of you, turn it over, turn it off. I want you to focus the next half hour because there's going to be some really good information. I hope, to be able to show you exactly what's going to be happening with tokenization and how this would apply over to your business. So real quick, if I haven't introduced myself, my name is Gavi. I'm the head of marketing at SolidBlock. And SolidBlock, what we do is we help fund managers and asset owners to be able to tokenize their properties, so they're able to get the benefits of tokenization, which means they're able to fractionalize their investments, be able to get secondary trading secondary trading or trading on a secondary market to be able to grow their brand and their investments. But also on kind of the operational side, this is one of the real big opportunities is by leveraging things on tokenization and blockchain, allowing them to be able to automate certain parts of asset management that weren't able to be automated before, right? Automating your cap table, automating your compliance, automating your books and records, compliance, KYC, AML. Think about that being automated for a second. And that's what we focus on, and that's what we're here to help everyone out with. And there'll be questions at the end. So if you have any questions, hold on to them. I'll be happy to answer any questions at the end of the presentation. All right, so let's just talk a little bit about what blockchain is. So blockchain is basically it's a worldwide network. Instead of having a single company or a single server that's controlling an application, it enables computers all over the world to be able to manage something in a completely trustless way. So it allows for transparency, it allows for security, and allows people to be able to see what's going on and be able to, like, one of the biggest things that a lot of security programs are designed to do is to enable trust, right? Because if you go out to the street, that's usually where there's no trust. But blockchain enables is more enhanced trust, and allows for a lot more options going on in the future. And it's something that's really going to be changing everything. If you look at what's kind of happening in the big banks and the financial institutions, everyone's starting to get ready for this change. They know it's going to be coming because this change follows almost exactly the internet trend. So if anyone's familiar with the innovator adopters adoption curve, which Jeffrey Moore was the author of this book, kind of showed basically how technology gets adopted. Where blockchain is overall right now is very similar to where the internet was in the 90s, right? So in the 90s, and you can see these things if you hang around on crypto Twitter long enough, you'll see people showing all these news articles like, hey, the internet was a passing fad. The internet, was it had its boom and then it collapsed. And you're seeing exactly the same thing in blockchain technology and adoption today. And the reason why that's happening is because there's different stages that need to happen for any type of technology to be adopted. It goes up and it goes down, but the stages that it goes through is, first you're going to have your innovators, and the innovators are the people who can really understand the technical ways something is going to be implemented, and they're kind of like the guinea pigs who really jump in and kind of prove use cases. Let's say the interface, for example, is not easy to use, so they understand the tech. They're able to play around with it in a way to make it work, and then they're able to say, hey, listen, this is working now. Now it's not packaged well, it's not pretty. If you want to take it mainstream, you have to change a lot of behavior. And just kind of from a product development standpoint, really with any product development, what you want to do is you want to mimic behavior as much as possible to be able to achieve mass adoption. So that's kind of the innovator stage of the innovator's adoption curve. Then you have the early adopters phase. So this is kind of where blockchain is today, right? So you're seeing larger people get on board, but let's say you have investment banks that are adding Bitcoin to their portfolio and other types of things, but it's not all of them yet, right? Because it's still an early adopters phase, and it's technology that still has to be proven. And I'll give an example of this later, kind of just like the fear aspect and how to understand that in relation to kind of large institutions as well as to regulators, and kind of how they view things. But basically, the next stage is when you get to the early majority, and that's kind of where technology's been ironed out enough that it can achieve mainstream adoption. People are able to use it with the benefits with minimal changes to how they're currently doing things. And then that's really where it kind of achieves massive adoption. So if you follow the curve for where the internet was, I mean, again, who can live without email today? Or something as basic as email, but in the mid 90s, most people didn't have email. You weren't using email for your work. Nowadays, you can't live without it, right? So we're basically at about 1997, 1998 in terms of adoption, right? We had that big .com run up in the late 90s before it crashed in 2000. Before then started to rebuild. And the reason why this is kind of important, I'll give you good examples in a second, but just understand, like, in terms of the statistics and the data, the World Economic Forum is estimating that 10% of all global domestic product, all GDP, is going to be on the blockchain within the next 5 years. And specifically with the tokenization market, More Global is estimating that it's going to grow about 5,000% in the next 5 years to 2. Which is today right now a $2.3 billion industry. It's a bit higher actually, but it's going to get to almost $1.5 trillion in the next 5 years. So 5,000% explosion. This is where things are going to be going. But the question is, what are the pitfalls we're going to see along the way? And I think we're experiencing and seeing it right now. I'll give you a good example of this. So I'm assuming people here at some point in their life, maybe even recently, have shopped at a store called Amazon.com. So Amazon.com is a massive e-commerce retailer. But if you go back to where they were in the 90s, most people did not think that they were going to become the huge company that they were today. In fact, when kind of e-commerce was really starting to take off in the late 90s, there was another company called Pets.com that got tens of millions of dollars in investment in VC funding, and they were basically going to be the pet store online. They were going to overtake everything. They were going to be the standard for e-commerce stores going forward. Now, today, Pets.com is gone. Amazon.com, as we know, is clearly around for and has grown just a little bit since then. So the question is why. And here's like, if you want to think about a really good business principle, there's nothing better. Like I actually didn't see anything better than this quote I'm about to tell you. So somebody once asked Jeff Bezos, right? Jeff, what do you see happening in the marketplace in the next 10 years that's going to impact Amazon, and what are you doing to get ready for the change? So his response was, I actually don't know what's going to change in the next 10 years, but here's what I know is not going to change. I don't really see a scenario happening in the next 10 years where people are going to come to me and say, hey, Jeff, I love Amazon, but I really wish the prices were higher. I wish there was less selection. I wish things were shipped to me slower, and I wish the quality was less. Right. So by having those guiding principles, that enabled them to be able to know exactly kind of what direction they need to take their business in. Whereas pets.com, kind of their unique selling proposition was we're a pet store online, and you can get basically the same products you can get at the pet store up the street from you, except that it's going to be more expensive and it's going to take 2 weeks to get to you. Right. So in terms of internet adoption, it wasn't about the technology. It was about the underlying business principle and business practices and the proper fundamentals, right? If they were in place to be able to see this adoption, and this is exactly what's happening right now in the blockchain space, right? So, what's happening, and I always like to make sure a very, very clear distinction between what I'm calling blockchain products like tokenization compared with digital assets, or I say more specifically crypto assets, right? So the crypto asset world, the Bitcoins, the Ethereums, the XRPs of the world, this entire asset class is in price discovery right now, right? That's why the prices are going up and down. There isn't agreed upon value about what this thing is worth. However, when it comes to blockchain application, all we're doing is we're using the same blockchain rails to apply real world value on top of it. So for example, when it comes to real estate on the blockchain, what's going on in the overall crypto space has no impact on this, right? It has no impact on it because what's driving the value of these tokens is the same value the same NAV that drives the value of the asset today, just divided by how many tokens there are. That's all it is, right? So the technology is there, and the technology is proven and strong. And there's a difference between the technology and the asset class that's right now being built on top of it. And the question winds up being also like, how do we see into the future what's going to be happening to be able to make a decision and be able to take action on it? I think a great example of this is with Sam Walton, the founder of Walmart. If you want really one of the best business books I think I've ever read, is read his biography, Made in America, because it just shows you his way of thinking about how he got into the space, became the huge company that it was today. And this principle is actually a really good example of this. So what he would do once or twice a month, he was a pilot, and he would take up a plane and fly around an area that he was thinking about putting a store in. And what he would do is he wouldn't look for where was the highest traffic place, and we'll find a place and put the store there. He was looking around and saying, okay, where are the developments what are the developments that are going on around here that they're going to be completed in the next 2 years? And we want to buy land there now and start building the Walmart there now. So what happened was he would do that, buy the land for cheap, buy up a whole strip mall. And then 2 years later, when everyone started moving into the new houses, the Walmart was already there. And every single other business now had to pay him to be able to rent space for their stores in the area. So this is how we really won. The question is, how can you see the changes that are happening in the future so you can take action now and be ready for them, right? And that's a really kind of good example. And a good example of a company that didn't do this is Kodak cameras, right? So Kodak cameras went Kodak, right? I remember Polaroids. I think they were the Polaroid company, or maybe it was a different company. And I remember in 2011, they went bankrupt. They went bankrupt because the digital camera trend came and it basically blew them out of the water, destroyed their film business, and they didn't pivot fast enough, and they basically lost that entire business. Bankrupt, someone else bought them out. They're still around today, but they're not. It wasn't the original owners or the original. I don't know where things are holding today. But the biggest irony of this is that the company, or say in 1975, there was a engineer named Steven Sasson that actually invented digital camera technology, and he worked at Kodak. So as part of Kodak's R&D team, he invented the technology that wound up bankrupting them 35 years later, or 30 years later. And the question is, what happened? And what they did was they the people who ran Kodak at the time said, listen, any type of new technology is scary for us to implement because, listen, we're a publicly traded company. If we implement a new technology and we start adding it to our product line and it doesn't do well, our stock price will take a hit, right? Everyone's going to call us a bunch of idiots because we're trying to implement something new to the market. We own this technology. We own the background. We own the technology, and we want to be able to go out on a kind of a good note here. So they patented it. It went into kind of cold storage for 20 years, and then they all retired and they wound up moving on. All right. So what does that mean in terms of tokenization? So let's talk about a bit about tokenization. So tokenization is essentially taking ownership of something and moving it over to the blockchain, right? So I'm going to actually share my screen for a moment and I'll show you the process here. So give me a moment. All right. So on a high level, this is the overall process that happens today. When you have an asset, right? What you're going to do is you're going to create an SPV that's going to hold the asset. The asset's going to be held by the SPV, and then you're going to give this over to your investors, your LPs, who are going to buy shares in the company, right? The challenge that winds up happening with this, the capital's then locked until it's sold, and then books and records, cap table, all those challenges that come with it. People do want to make changes during that time. So here's where things kind of deviate on the tokenization side, right? So just from a legal framework, we're still going to hold your asset in the same SPV, but then we go through a digital securitization process. So we're going to take basically whatever in the PPM that's written up, turn that into a smart contract that whatever the rules are in terms of how the asset's going to be distributed, again, every detail that's in that legal document, and that's transferred over to the smart contract. We create tokens that represent the equity shares in that asset, and then what happens instead is that the investors are given these tokens to be able to hold, and they give them a lot more options in terms of what they can do with those tokens. Now, it's important. One thing that's important to understand here is that if the LP decides that they don't want the tokens for whatever reason, right, they don't have to take them, right? So you can burn the tokens, and the addendum that's written to the PPM enables you to have basically any flexibility you have. So this is the legal framework that moves the equity just to those tokens and allows people to then manage it from there. And once you have the tokenization, once you have those tokens in place and it's on the blockchain, it allows you to be able to now get a lot more detailed in terms of managing your books and records, doing all your accounting on the blockchain. KYC, AML can all be done in an automated way, again, via the blockchain. Kind of what you can do if you want to ever enable secondary trading for these things is people can go through KYC, AML accreditation. So you now have a wallet ID that's attached to an accredited investor, and you can create a pool of whitelisted wallets that enable people to trade amongst each other, either in someone's own fund or on a secondary exchange, if that's what they're looking to do. The same thing that can also be done is that if you have a yielding property, right? If you have a yielding property, then when you do the payouts each quarter, what you can do is you can just move that payment over to USDC and distribute them through an automated fashion, again, being defined in the smart contract by whatever the allocation is supposed to be from the PPM, and then be able to distribute them automatically to anyone who wants. So not only that, what you can also do is that there could be a choice that's done by the LP. They can decide if they want to take that as income or if they want to reinvest that into another fund and say, let's say you want to go buy an additional property in the future and say, hey, listen, you can take this as income now, or you can put it back into the fund, and then when we have enough, that whatever you've distributed will go back to or your allocation will be given to whatever the future building is that we're going, or the future asset is that we're going to buy. The other thing that's also just is important to understand is that this overall, in terms of the asset management life cycle, can lower the overall cost by anywhere from 30 to 60% after the security has been issued, right? So if something's been issued, in terms of the management of it, the cost can go way down after that's done. Again, the way I kind of like to explain it, imagine if you could take your accounting and compliance functions and turn them into a computer code that can be executed by a secretary, right? It's not quite that simple, but imagine that for a second. That's what could wind up happening. In terms of capital raising, this is a question a lot of people have. So tokenization this is important to understand, is that tokenization is not something that people like, because it's crypto, people magically run to it and start investing in it, right? Particularly, like, and this is what I said before, when it comes to these blockchain, the blockchain for that has a real world asset on top compared to a crypto asset, the value of this is still going to be driven by whatever the value is of the real world asset. So if the real world asset is, if you're having trouble selling in the traditional manner, tokenization is not going to help you with that. But what it will help you do is, if it is a good asset, it gives you a lot more options and a lot more flexibility going on kind of in the future. So it's a little bit, this kind of also about solid block to understand kind of our history. You know, it's like, so it's not that we were the first, but like, we were the first, but the standard that's done by every tokenization company in the world today was for the process that solid block pioneered. Basically, the process I just showed you, and obviously it's on a very high level, but this is basically the process that every single tokenization company uses. And what we and really what the kind of the innovative side of this, not just on the tokenization side, but it's also kind of the legal innovation, which is what enables this to be done in a fully compliant way according to the SEC regulations. One thing I think also is in terms of like one question people have had about risks when it comes to tokenization. Right, I'm just reading my note here. Just I think it's an important point to say, is like, what happens if someone does this? What happens if they tokenize their asset, and then they go to their LPs? Hey, we have this tokenization, and the LPs don't want. So I said this before. The LPs can basically say, we don't want to do this. We don't want to take the tokens. We want to go through a regular process where we get equity share in in the LLC, and that's it. You can now just go and burn those tokens and distribute as needed. There's no issue that you're not stuck with these tokens. It just gives you all the other options you would want to be able to do if you were to tokenize, or if you did have people who did want to collect these tokens in the end. So I'll get to questions in a minute, but just to recap real quick, kind of what we covered in today's webinar, right? Understanding how blockchain is changing everything, right? Following the details of, or following the trend almost exactly of internet adoption, how to understand the trend of technology that's going to be changing, and the details of tokenization, and basically how it can allow for cheaper asset management after the security has been issued. So I'm gonna go through some questions now. I'm just taking a look here. So we have some questions in the Q&A section on the site. Let me go through this real quick. Feel free to, if you have any specific questions, now's the time to answer, or now's the time to ask it. So let's go through here. Okay. If a token represents a share of a company, is selling a token a securities exchange event? I'm assuming like what you're asking is if somebody has this token, if somebody has this token that wants to sell it to somebody else, then yes, it would be a security exchange event, meaning they would have to be able to exchange that or sell that only to another accredited investor. It's not like they can go go to any exchange or sell to somebody else. And the way that we're able to keep that in place, kind of keep the, because again, the whole point is that the legal framework is within the existing SEC guidelines, within the existing SEC regulations. And if they want to go sell that to someone else, what happens is that or the way this is kind of kept in check is that the smart contract, right, that controls the token, if they decide they want to go send this to Joe Schmo who lives out, I don't know, somewhere, he makes $20,000 a year and he's definitely not an accredited investor, and he's like, hey, give me my wallet and sell me these tokens, he won't be able to transfer to them. The only way he'll be able to transfer to them will be to go through a whitelist process, either on the solid block platform or for one of our exchanges. And then anybody who's whitelisted, and whitelisted means after they've gone through KYC, AML, and accreditation, to make sure that is this person someone we're allowed to exchange these tokens with, and will then allow them to do that. So if they have somebody who is an accredited investor and wants to do this, the way they would have to do it is first go sign up on one of these platforms, and then be able to go through the process, and then they'll be able to transfer the tokens over to them. All right, so let's see. is there a legal framework that recognizes a token as a representation of the ownership of part of the real estate facility? Is it currently accepted by a legal system of any country? I think what you're asking is like, can you transfer this internationally? Is that your question? So I think that's your question. So if that's your question, I'll answer it like this: is that, you know, right now Solid Block primarily focuses on the process of doing tokenization within the United States, right? Because it just makes things easier. We can work within the existing SEC regulations, and certain particularly European countries, there isn't a lot of clarity at this point around the guidelines for it. There will be, and going to kind of one of the stories that I kind of give about this usually is is that if you go back to I don't know, 120 years ago, and steel has just been invented, and you ask a regulator, is this a good idea to go build a 100-story building with? They're going to say no, because they don't understand it. Even though an engineer will look at it and say, of course you could, everything checks out. So as this kind of continues taking off, other countries will become more familiar with it. But what you can do is you can create an LLC for that portion of the equity that you're looking to tokenize in Delaware the same way, and just go through the process in the United States. Shouldn't be an issue. So I believe that's what your question is. Okay. Sorry, Eric, it's got a bunch of questions. All right. Does this process require SEC registration? Yes, it does. Yes, it does. You have to. Yeah. This is fully compliant under all SEC laws. One of the most common regulations that you fall under is Reg D 506C, which allows for raising from more. I forgot the exact number, but more than I think it's 500. But it's more than the typical number that would be allowed in one asset. And what are the legal costs to create this structure? So legal costs are involved. Again, let's just separate this out for a second. If someone's looking to raise capital for a project, they need to hold on, trying to keep track of all these questions coming in. If someone is doing that, like, you still need to make a PPM and do your subscription agreement and all the other documents required outside of tokenization. That has to happen anyways. The tokenization side of it takes those existing documents that you have to use anyways. Well, the only thing we add on from a legal framework is the addendum that enables the tokenization, and then we do the tech side of stuff, being able to create the tokens, distribute them, issue them, manage them, create a portal for you to be able to do everything through there, and that's kind of how that would work. Doesn't this process add an extra layer of complexity for potential buyers? There's an educational hurdle for investors if it's not really even discussed regarding tokenization. So it doesn't necessarily have to be, because what can be done if, like, they don't. You're talking about, I think, the technical, that they have to touch the tokens themselves. So there's two options. Someone could decide, yeah, I'm the type of person, I want to take self-custody. Here's my wallet ID, send it to me. But you can also do completely custodial wallet through the Solid Block platform, which means that you can say, hey, listen, what we're doing, instead of us doing kind of a regular share distribution through the LLC, we're doing it through this tokenization process. And this tokenization process means that, if you ever want to liquidate some of it, you can do it through our platform, and et cetera, and kind of gives you more options. But they never want to actually need to touch it if they don't want to, right? So it can all be managed either, again, on your side, or if they decide they do want to take advantage of it, they can do it as well. They can go and they can see details on it, and it gives, again, more visibility and of everything that's going on. All right, let's see what else we got here. Does Solid Block provide an alternative trading system type of service where whitelisted wallets and their bids are shown to potential sellers of tokens? We do not offer it yet, but we partner with INX and T0 to be able to do that. And I'll just mention as well that for U.S. investors, there's a 365-day kind of holding period after the token is issued before they can trade it. But once that's done, we can put that on. We also have a relationship with the security token market as well, and you can put the token on those exchanges and be able to do that as well. So that's not an issue over there. All right, let's see what. Yes, kind of. That's a good point. again, this is really, really important to, I think, clarify here, is that this is a security, right? This is a straight up security. There's no, like, I know from a regulatory framework in crypto in general, there's a whole debate. Gary Gensler actually came out specifically this week and said that, Bitcoin is the only crypto that's not a security. I think he's in a lot of fight. I think there's definitely some that are 100% on them, but some of the more decentralized ones, the ones that like basically wind up not having a CEO controlling the code. I think we'll see. I think Ethereum's going to get there. Cardano is definitely going to get there. Things like Solana might be actually I think going to be more problematic because they're not so decentralized. But Cardano, when they're done with their I know Cardano for sure, when they're done with their roadmap, they're not going to have any more control over their blockchain. It's going to be completely self-sustaining. So I think they may get out of it. But in terms of kind of what we're doing with tokenization, it's straight up security. Again, what we're doing is we're taking the existing regulatory framework, putting on top of crypto rails, right? But the same legal restrictions and requirements will still apply. Can I list my tokens on many token exchanges? Yes, you can. Yes, you can. All right, cool. So let me go through. Did I miss any? Okay, can you explain what the difference is between tokenization of a real asset versus creating NFT as part of a real asset? Okay, so that's an interesting question. So the NFT is an interesting. So just so you understand, Solblock actually has an NFT product right now. It's kind of a bit of a niche product for us, specifically for hotels who allow people to be able to book hotels through NFTs. And the issue is, I think, again, not so much the technology, it's more so what you're looking to do with it, right? So if you're looking to basically book a night stay, there's no ownership that's being transferred there, right? So in this case, really, with the NFT, if we're actually transferring ownership over it, and I don't know, you might be asked this, I think there was another tokenization company that did this. So I don't know what their legal, what they did legally with this, but basically, if you're doing ownership, doesn't matter whether it's tokens or an NFT, it still is a security, right? It still requires you to go through the SEC process for ownership transfer. So that's kind of like again, it's different technology, but it's the same. Like again, take technology out for a second. If what you're doing is a process that in the real world requires it to be a security, then it's still a security even on the blockchain, right? So that's the difference. That's the difference there. All right, Kenton, thanks for that. Yeah, Elle's not actually the call. I'm actually borrowing her Zoom webinar for this call. So that's what's going on over here. Yeah, no, NFT can't get you around me. It's kind of again. So I'll just tell you, it's kind of interesting. The NFT industry, there's not so like it's. So right now, what's happening kind of on the regulatory side is that they're starting to get a lot more, or they're starting to put down a lot more guidelines for regulations. The Biden administration has said they want clarity on Bitcoin. I think part of it is also, I think that there is a national security concern. I'm not going to go into too much details because I don't want to scare anybody. but basically they're giving might be able to say, yeah, I actually the chat does get saved, by the way. So I do see this chat afterwards. But basically what's happening on the regulatory side right now is they're coming down with guidelines for the entire crypto industry. I think particularly after the collapse of Terra, like you kind of seen this coming. Like already last year, you had senators going after stablecoins and concerns about it. And I think stablecoins should be regulated. I think that stablecoins, particularly if you're saying that this is something that's backed up by real world assets, I want to understand what it is. Because like if I'm investing in a stablecoin, my assumption is that it's going to stay $1, right? However, it's being backed by, like, you don't want to have a scenario where all of a sudden if you're holding $1, even with inflation, like I know it's still worth $1, even if it lost value because they inflated the money, it's still worth $1. It's not like the dollar itself dropped to 40% or dropped to 40 cents. It's still $1, just that dollar has less purchasing power. But from the stablecoin perspective, if someone's going to come and say, hey, listen, we are issuing the stablecoin, and don't worry, we have enough assets to back it if we need to, I think that there needs to be regulation around that, because people, if they get out of crypto, they want to hold their money somewhere and they assume it's going to be stable. So like that's going to be, I think, really, really important to do from a regulatory standpoint. Also, to understand Gary Gensler, who is the SEC head today, you can actually go on YouTube. He has um, uh, a course he gave. I want to say it's at Stanford. It might have been Harvard or one of these top level universities for free. Blockchain and Bitcoin. His entire semester class that he gave at this university. So he has a really good background in terms of understanding about blockchain and specifically Bitcoin. So he understands this industry very, very well. I have, again, I think they may go a little bit overboard in terms of regulation for some of the other cryptos that have real utility. Because again, the difference between Bitcoin and everything else really is that Bitcoin is completely decentralized. There is no CEO. There's no one pulling the strings on the organization, on the company. It's a commodity, right? That's traded in the marketplace just like any other commodity, as opposed to Ethereum, which is number two. There's a CEO, it has a face, Vitalik is the face of the organization, and he's guiding the development of the platform. Same thing with Cardano, which is Charles Hoskinson, right? There's a face to the company. Now, again, whatever their goals are, their goals are eventually they do want to become a completely decentralized organization, a DAO, completely. That there is no longer any say from a centralized authority. We'll get there. We'll see what happens. So from a platform level, I think it's going to be important. All right, let's see if I got everyone's questions here. Let me just review here. I think I got everyone's questions. So if that's it, I think that this has been cool. Any other questions on anything else? Hold on. There's two windows. That's why I keep going back and forth here. There's a Q&A section and there's a chat section. Okay, what do you think of generating NFT real estate to target the NFT market? Those who are interested in NFTs. Again, so I'll tell you how to think about this. If you take technology off the table for a second, what would you do? Okay, if there's a legal way to understand it, and legal way to kind of guidelines to work within, and then there's a technology. So the answer to your question is yes. If you think that you can sell an NFT to someone because they're going to be more likely to take the NFT, and again, I'm the blank on it. I think I want to say it was Proppy that did do a sale through with an NFT, because essentially it's a deed that shows ownership, right? As long as there's some back. Again, I don't know what the because again, what we do is we're tying this directly into however ownership is defined in the current legal framework, right? So I don't know exactly how that would work if you're trying to supersede that or not. But eventually, like if there is something that's fishy from a regulation wise, like it will catch up with people eventually. But again, if you think that you can sell an NFT to the market, go for it. If you have people who can buy, just make sure you're working within the existing regulatory framework as needed. And if you're doing things that are just kind of if you're renting out a space, shouldn't be an issue at all, because again, there's no ownership that's being transferred there. Again, just understand kind of the real fundamental things with a security is that you're buying it. Someone. I'll give you an example. Kind of understand security versus commodity. So if a security is basically a organization that's owned by a company that is creating something that you can buy into that you're expecting to go up in value over time, right? People aren't buying corn or other commodities. Maybe they're expecting to go up over time, but there's no CEO that's pulling the worldwide price of corn or gold or anything like these other things. And again, from a political perspective, the difference winds up being, let's say a politician comes and says, I think everyone should own a house, right? It's totally fine for him to say that because a house is a commodity. But if he comes and says, I think everyone should own Apple stock, then Microsoft's going, wait, why are you telling them to buy Apple stock? Why aren't you telling them to buy like our stock or someone else's stock or all these other things? So that's kind of like the difference in a nutshell between this and kind of what we're doing here. People are buying doing real estate investing, buying into property, the expectation that the person running the asset is going to improve the value over time, and then they're going to get a return over time within kind of a legal structure. All right, cool. So guys, this has been awesome. We'll probably do another one of these in the next 2-3 weeks. If you have any specific questions, by the way, I think all of you got my email directly from me. Feel free to email me and ask me if there's anything you want me to cover for the next webinar. Happy to do so. And it's been real, and I'll see you guys all later. All right, see you, bye.